What is going on, everybody? It is Ahmed, and I am back today with yet another video for you all. You guys see the big smile on my face. You see the green light in the back because Bitcoin and cryptocurrency are finally going on an upward trend. Now, remember, I always like to preface by saying that I'm not a financial advisor, but rather, I always try to put you guys on the plays that I'm in. It happened. There was a leak last night from the Treasury regarding the executive order that Biden will be signing today on Wednesday, March 9th. So we're going to go ahead and dive right in and talk about all things related to the crypto market because things are looking bullish, folks. Bitcoin finally back up over 42,000. Ethereum holding steady right around 2750. And everything's just green. Finally, we had some good sentiments and good news. Better than anticipated, I should say. Shiba Inu, our favorite crypto asset in the market's up 4.4% on the day, but Bitcoin is honestly leading the pack, up 8.3%. So we're going to go ahead and dive in and talk about what the executive order entails and why we are bullish. So if you're just looking for a place to get some quick information, make sure you always smash the like button. Consider subscribing to the channel where we talk about all things cryptocurrencies, NFTs, and in general, the markets. Now, before we dive in to the CNBC article, I do want to mention the links in the description below for free money, because free money is free money. 5 free stocks when you deposit money into your Moomoo trading account. It says here your inviter is YourPOP, so when you click that link in the description right at the top, you get 5 free stocks when you deposit money into your account and 1 free share of NEO, which is an electric vehicle stock. So if you're bullish on EVs, get your free share of NEO, become an owner of NEO stock, and also get your other 5 free stocks valued up to $17,500. Anywhere between $3 and $3,500 could be yours. And also, one more link for free money with iTrust Capital. Take advantage. A free $100 funding reward is waiting for you as soon as you click the link and then you hit this open account button. Sign up with your email, deposit some money, and you get a free $100. Here it is, folks. Right here, the day we've been waiting for a really long time now. From digital dollar to tackling illegal activity, here's what's in Biden's executive order on crypto. So Biden and his administration have been working on this for quite some time, maybe arguably end of last year, beginning of this year. But the things that we want to notate, and shout out to CNBC for always having really decent summaries of some jargon and, long articles. They say here, U.S. President Joe Biden signed an executive order on Wednesday calling on the government to examine the risk and benefits of cryptocurrencies. Next, they go into talking about the measures, focus on 6 key areas. So remember, there are 6 components of this executive order. Consumer protection, extremely important. Financial stability, because the market is volatile. Illicit activity, okay? U.S. competitiveness, financial inclusion, and responsible innovation. All things that I 100% believe that we need to have some oversight in. In addition, the Biden administration also wants to explore a digital version of the dollar. Guys, this is good news. The big things that we need to realize that have come out with this executive order is no talks about crypto ban, right? No talk about stable token bans or stable token, basically being removed from the market. Yes, there was talk about a CBDC or the central bank digital currency. So central banked digital currency that is backed by the U.S. central bank specifically, which will be known as the CBDC. U.S. President Biden signed an executive order on Wednesday calling on the government to examine the risks and benefits of cryptocurrencies. It's long-awaited directive that has had the crypto industry on edge, not least due to growing regulatory concern around the world surrounding the nascent digital asset market. And that's the thing. We didn't really have any direction moving forward. And that was the problem. People weren't sure. Are they going to come out extremely bearish? Are they going to come out with no kind of real, regulatory related issues? But of course, the thing that they're looking at right now is that exactly, which is oversight. So the fact that there was no words about, illicit bans or specifically stopping crypto transactions from peer to peer, having to centralize all of our wallets, right? That was a huge scare. What if every DEX and every centralized or decentralized wallet, like Coinbase wallet or even MetaMask wallet, you'd have to imagine having to centralize those just a little bit more, taking away the power of crypto from the people, and then again, sending it back to the central systems, which of course would be a huge setback for all the things that have been accomplished over the last decade. There have been reports of a divide between the White House officials and Treasury Secretary Janet Yellen, leading to delays in the policy rollout. The crypto market got wind of executive order overnight after Treasury accidentally put out, and that's where we got the initial information. They put out an accidental information, but of course the internet's too quick. If you put information into the internet accidentally, it's going to get archived and it's going to be saved. A since deleted statement calling it historic and releasing some of the details ahead of time, which is anticipated anytime today. And I'm hoping to do a live stream as soon as that information goes live with Joe Biden. The order was finally signed on Wednesday. It calls on federal agencies to take a unified approach to regulation and oversight of digital assets, according to White House fact sheet. Here are the key things that we need to know, and they were listed above. The 6 different aspects of the executive order are listed there. Now, while policymakers have been keen to downplay any systemic risks resulting from crypto, there have been increasing concerns over the role played by stablecoins. These are digital tokens that are meant to be pegged to the value of existing currencies like the US dollar. Tether, the world's largest stable coin with $80 billion in circulation, which is it's not a small number, has attracted the ire of regulators over claims that its token is not sufficiently backed by the dollars held in the reserve. Tether says its coin is fully backed. However, the makeup of its reserves includes short-term debt obligations like commercial paper, not just cash. Yes, commercial paper. The topic of stablecoins was notably absent from the White House's announcement Wednesday, though Yellen has made clear she wants to see Congress introduce regulation for the sector. So that's kind of a little bit what we were actually anticipating with this executive order: oversight or regulation when it comes to these stablecoins. And that's kind of what I thought the limit of it would be. But now, if the United States comes out with a CBDC, a central banked digital currency, what would that look like? In my opinion, I think, again, it will probably rule out the other options for stablecoins. Yes, of course, in the short term, that's going to negatively impact the overall cryptocurrency market, specifically having to transfer all of our money that has been in other stablecoins back to the CBDC. That, of course, is going to be an issue. Now, with CBDC being its own token, its own entity, it might have other rules that apply to it compared to something that is not backed by any central bank. Maybe they'll have access to information that people aren't willing to share, or have access to, again, more information in terms of being able to figure out the tax situation, right? The tax burden for everybody. Because oftentimes when a market turns bearish, or we see with volatile markets, when crypto is downtrending, people transfer their money from all the different assets back to a stable coin. So if there was only one option for stable coins, that of course would hurt the overall ecosystem of cryptocurrency. But in my opinion, again, I don't think that's what's going to happen. But now the only thing that would actually be backed by the United States, maybe get FDIC insurance, would be something like a CBDC proposed by the United States of America. So I really do appreciate your guys' support. This overall, of course, is exceptional news. Things are looking absolutely bullish as Bitcoin holds above 42,000. But we'll see where this goes. I think, again, it's going to take time for us to get through the pain, because how long it took for us to come down to these levels, it's probably going to take just as long to get back to the levels where we were at. That $68,000 to $70,000 Bitcoin, that $4,800 to $5,000 Ethereum, that all-time high for Shiba Inu, the all-time highs for Solana over 200. It's going to take time for us to recover there. But if you're bullish on crypto and you're here to diamond hand and stay in the space, opportunities present themselves for buying still, as we're significantly down from all-time highs. Appreciate you guys' support. Make sure you smash that like button. Consider subscribing to the channel. And until next time, everybody, keep investing. Peace.